Want to talk about pin action today. The market is in the crapper, and that was expected. And why it was expected is because of the QQQs rolling over yesterday. Anyway, INGR, that's my company to trade to invest in by selling the Quick Loop company. That was yesterday. I recommended to sell out of this one and buy INGR. So INGR had a decent earnings. You guys got to go read it. Corn prices, which is their input cost, is obviously the big issue here. But their sales are starting to increase as the economy opens up. And I think the report was pretty good. So I own INGR, and I'm going to start adding to it. Now I want to talk about pin action today. And what does pin action mean? When a company reports good earnings, you have to look at if it is the company itself doing well or it's the entire sector is doing well, right? So and if the entire sector is doing well, you may want to buy companies in that same sector that are benefiting because of this company's report. So today's good example of pin action is Henry Schein is a company that does dental products and animal healthcare products, and this company has reported a really good earnings report, and so when I looked at the report this morning, I'm like, man, this is really good, and let's look at what I saw in the report. So here's the earnings report, and when I read the report real quick, right, here's what caught my eye. Global dental sales have increased 21% in local currencies. Global dental merchandise has increased by 13%, and then it says right here, right, sales for the first quarter of now increased 24%, right? So the dental part of their business is really doing well, and as the economy opens up, people are going to go to the dentist, right? Because people have been eating a lot of sweets, and they have bad teeth, and I mean I basically lost half my teeth, all right? But here's Hershey's, here's Hershey's, and here's Hershey's. It beat by 12 cents, beats on revenue. And people have been home, they've been eating donuts and chocolates and candy, and and not going to the dentist for a year. So so how do you do pin action here? So Henry Schein had great earnings. So the pin action for that is I jumped in and I bought a shitload of shares of Patterson Dental. Okay, I'm in it early, right? And Patterson Dental does dental products, and the dental business is a high margin business, and as the economy opens up, more people are going to go to the dentist to do their cleaning, root canals and things like that. And it's like, what would you rather own, right? And so here's a company that I really like, because number one, Henry Schein reported that the dental business is doing well, so it's a pin action. Number two, its input cost and its labor costs are well managed. Right now, the biggest issue in the overall economy is that as we are coming out of COVID, the supply chain constraints are causing inflation, and there's labor shortage because people don't want to return back to work because they're getting good benefits thanks to Biden. And on top of that, there's not a lot of skilled labor, and then from the materials, a combination of Trump's tariffs and now shut down for about a year is causing issues with materials. And like I pointed out yesterday, the COVID in India is a big concern and it's a big concern to the bottom line profits of a lot of these high multiple, high growth companies like Apple. And so you can see that Apple, Google, they reported really good earnings, but they're rolling over. They are starting to roll over, and that should be a concern to the market. You cannot support a higher growth if you have a threat of increased corporate taxes, increased inflation, increased labor costs, right? So you calculate the net present value for these companies, and you adjust the net present value for inflation. Then you start looking at your COGS, and you look at their balance sheets. It becomes a concern. Okay. On top of that, let's talk about defense stocks. Here's Northrop. I sold it yesterday, and like I said, just thinking based on the cup and handle, it looks like 395 in a year, but I think it's in a hurry to get there even a lot sooner. Like 2 candles up, right? The problem here, the reason I sold it, and it could go higher, is because there's right now China getting into Taiwan, and Biden talking up crap to Putin, and Kim Jong-un has stopped choking on his donuts and wants to launch missiles again. The issue is, just like all these companies, Northrop will be facing issues with higher corporate taxes, probably a cut in defense budget spending next year, a midterm election that may become an issue. Then on top of that, you have the price of steel, aluminum, titanium, all these the input costs are rising, right? So right now it is trading fairly well based on its forward multiple, and I think $380 to $400 is a fair target for Northrop. So you can look at a 10-12% return for the year, but you know what, I want better returns, so I've sold it. ORI, I just want to show you the value part of my account, the ones that I've recommended. I don't disclose all my holdings, but here's Old Republic. I gave you guys this stock a while back. Here's CSWC, that's tailing off, MPW tailing off, but these all have high dividends. So when you take the dividend into account, you're doing pretty good. So here's BKEPP, right, doing really well. I gave you guys SBO. I told you guys this will have $4 in free cash flow. This chart's still looking good. So the one that I added today, and I added a huge amount, not Prodex, I'm sorry, PDCO, Patterson Dental. All right, I'm in Patterson Dental. INGR, I would suggest you own this company. It's down today. Earnings were actually pretty good. Corn prices are higher. It's going to be an input cost issue, but they can drive that to the bottom line. Thank you.